Oh man, so another red day for Bitcoin, down 2.7%, giving up all the gains from yesterday in a pump, which I said in yesterday's video we should not be chasing. Fantom down about 5% today, forming another bearish pattern, which I need to show to you in this video. I'm going to share with you the exact levels in the price charts to watch, what to do and what I'm doing in this market. So guys, hit up the like button. Don't forget to subscribe. As always, we're committed to bringing that blend of technicals and fundamentals all in one video. Technicals on their own do not help you if you don't have the confluence of the fundamentals. And we spoke yesterday about this Bitcoin pattern forming, and we said do not fall for this pump. And we had the pump from the bottom of the channel all the way to the top here. Let's just get zoomed in on this section here, and we had this run from about 19,000 at the bottom, and it got to as high as 20.5k here, and a lot of people were excited, leverage longs getting excited, and then they got wrecked to the downside. Bitcoin then fell today all the way back down to about 19,300. Over the last couple of hours we've seen a recovery. I'm going to show you what's causing the recovery back to the upside, but from a technical perspective you can already see that that's expected, right? We're just staying within the pattern which we expect, and we need to decide on a breakout pattern. Either we're going to break out to the upside, retest, and on we go, or the more likely scenario is we break to the downside. Remember, why is this the more likely scenario? This is because we are in a bearish continuation pattern, okay? This is a symmetrical triangle. This is a bearish continuation pattern. The majority of the times it'll break to the downside, and if it does, the technical price target does indeed sit at about $15,000 here on Bitcoin. Now, what does that mean for some of the altcoins? Let's take a look at Fantom, and I've seen a few different patterns on Fantom, but the one I want to share with you here today, and you're not going to like the price target that comes from it, I'm telling you straight away, is this ascending broadening wedge we're forming here on the Fantom chart. Now, an ascending broadening wedge, mouthful to say, is a bearish continuation pattern as well. You enter the pattern, you most likely break to the downside of this pattern. So what you're watching out for is exactly what has just happened, which is this. Normally, the ascending broadening wedge like this, if it moves like this, you can say, okay, we're going to rally back to the top. But can you see this? We've just rotated back down now when Bitcoin fell today. And that is now saying, okay, we're spending more time at the bottom of the wedge, which means it's more likely that we may start breaking to the downside of this wedge. Now, obviously, this is going to take the lead from Bitcoin. If Bitcoin breaks down from that symmetrical triangle, which I shared with you, then this price target can start to play out. You're going to, as you start to fall from this wedge, the technical price targets will be the first pivot point at 20 cents. Then you've got your next low point at about 19. But the measured move, which is the measured move of the wedge, is to take the distance from the top there, the top of the wedge, and apply that to the bottom. And the breakout from that, nobody's going to like this price point, would take you to about 8.5, 9 cents here on Fantom. Now, I'm not calling for that because we have to tie up the macros with it. We have to see how Bitcoin plays out. But just to show you what the technicals show you, and we have to marry that up with confluence. If I bring out the EMA ribbon on the 4-hourly, you can see here we've had brief moments here. This is actually progress, right? Because we've had brief moments of turning this bullish and then trying to hold it and then flip back bearish, then gone back bullish. So in essence, what you've got here now for the EMA ribbon is a truce. Right, it's a tug of war and it's sideways at the moment, so it's neutral at this point. But you have to take over the macro trend, and the macro trend from the higher time frame, which is the daily chart, continues to show that we're getting a bunch of resistance from the EMA ribbon, as you'd expect. Now, so just look at the previous behavior. Big extended move to the downside, got to the EMA ribbon, rejected, got to the EMA ribbon, rejected, rallied back up to the EMA ribbon, rejected. Are we going to see the same, or are we going to get a bit more of a relief rally into the EMA up towards 38 cents? Now, the way that would play out is if Bitcoin does something similar. If Bitcoin can break out from its symmetrical triangle, create a double bottom pattern, which is also known as a W pattern, and head towards 26, that is its route for escaping. But before doing that, it needs to get to the top of this triangle, retest, and head to the upside before completing its double bottom pattern and breaking and trying to run towards 26. So that is what we're seeing from a technical perspective. Now, if you want to marry that up with a bunch of on-chain metrics, go and watch my video from earlier today, the Bitcoin video, because we do go through a bunch of on-chain metrics. It's really important to look at the on-chain metrics as well. Now, if we take a look at the wider markets, you can see the wider US markets continue to be red. They continue to be spooked about recessionary fears. You can see 1.4% down on the Dow Jones, S&P down about 1%, and the Nasdaq holding up fairly well. This is quite rare, where it's slightly up today. But again, that's changed intraday. So if I go on to the S&P, let's take a look at the S&P. Let's remove this EMA ribbon so we can see it clearly. and head over to the hourly, this red line is when the market opened up. And you can see as soon as the market opened up, we opened up in the red, which is why Bitcoin fell, right? We saw the markets open up red, taking it with it. And now you're seeing a recovery towards the back end of the day. And maybe this is what is helping crypto start to run back up. So that is exactly why we're seeing this pattern on Bitcoin. We saw this as the S&P opened up after the long weekend and sent it down, and we're seeing this as the S&P tries to recover. Okay, so now let's try to understand, what is going on in the wider economy. Well, we've got loads of data coming out. We've got the FOMC minutes coming out tomorrow. We need to look out to see if Jerome Powell says anything particularly hawkish, or if any of the Fed officials say anything in those minutes. We're then going to get the jobs data, the non-farm payrolls on Friday. That's going to be a huge piece of data as well. Expecting 250,000 there versus the 390,000 in May. Again, double-edged sword. If that comes in too low, then there's fears of a recession. If it comes in too high, then it is Jerome Powell doing enough. So we need to keep an eye out for this macroeconomic data. Now, the other important message I want to give everybody is we need to start picturing in our head what better situation would start to look like, right? What are the characteristics of an improving market? Because sometimes we can start becoming irrational and we look towards influencers, or we look towards certain people we trust in the market and say, oh, have we bottomed out? Yeah, have we bottomed out? But why don't you just write down on a post-it note, what are the clear indications that we've bottomed out here? For example, one key one would be we want to see CPI reading come down. Right? It's 8.6% on the last reading. Is that going to come down? Well, the estimations for the next reading on July the 13th are suggesting 8.8%, which is a further increase. So that's getting worse. Then we want to look at things like commodity prices. Are they going to go down? We want to look at things like oil. Can we get the price of oil to about $70 to $75 a barrel? Will the war start to improve? Can we see a de-escalation in the war? That could help markets. Can we get good earnings this month? All of these are the things we need to start looking at to say, okay, these are the things that can give us a bullish catalyst. And until we start to see some of these things, we need to hold our emotion, because sometimes your emotions can just play with you. And that is why I saw a lot of people get wrecked yesterday, getting excited by this bullish pump. A lot of inexperienced traders were trading, following YouTubers. That was not a pump to trade. You're trading against the trend. The trend is a downward trend. If you're going to do it, be very experienced with a tight stop loss, no leverage, and maybe you can make a little bit of money doing that. But to take crazy leverage trades against the trend is just going to get you wrecked. So you're better off just sitting on your money. It's a bear market. It's tough out there. Do what you're good at in terms of finding more cash into the market, right? If you can take an extra overtime at work, if you can stop spending on silly stuff, if you can take more freelance clients, if you're a freelancer, figure out how to improve your streams of income so you can go and buy the dip a little bit more on crypto. Playing around with a bunch of leverage will only get you wrecked if you don't know what you're doing. So there you have it, guys. There is a quick update on Fantom and the Bitcoin market. If you appreciate this type of quick updates, smash all the like buttons. Let me know if you prefer these ones or the slightly longer videos in the comments below. As always, check out BYBIT and BitGet. Links in description if you want to buy any crypto. It's not just derivatives there, guys. You can trade spot too. Hope you guys enjoyed this video. Go watch this video, and I'll see you in the next one.